All right. It is the week of April 3rd, 2023, and this is the Fight Business Podcast. I'm your host, Patrick Auger, and today we're going to focus our episode mostly on the official news now that Endeavor has indeed purchased the WWE through a reverse Morris trust by combining it with the UFC. So I talked about this on the show last week. It's huge news. It's all we're going to really focus on today. First, we're going to talk about some more financial details that we found out about the merger itself. Then we're going to break down the why Endeavor did this. So last week, again, I touched on the how in terms of how reverse Morris trust works, how the Endeavor could pull this off. Touched a little bit on the why, but this week we're going to really dive deep into the why Endeavor is doing this. We're going to talk about the business strategy behind it, the changes that could come to the UFC, if any. Will this affect the UFC's new broadcast media rights deal that's coming up? We're going to break all of that down. And then for the first time in the show's history, I believe we're going to end on a quick hits because, again, we've only got really one main topic that we're going to break into segments. So timestamps are going to be at the bottom as always, and let's go ahead and dive right in. All right. So first thing we're going to do is talk about the latest details we have on the merger with Endeavor and WWE. Some new information we've gotten. Big shout out to @JediGoodman on Twitter. Always on top of big news in the MMA space. This is no different. And he has been nice enough to put up the slides from the Endeavor investor presentation onto Twitter. So you can follow along with me if you'd like. Again, go to @JediGoodman, and it is a tweet from 7:07 a.m. April 3rd. Might be 8, depending on your time zone, how that works. But to just go through this, what we're going to do is go slide by slide and break down the information within them. The other thing I'm going to do while we do this is talk about the caveats that come with these numbers, because probably the biggest and most important caveat up front with someone who has helped create some of these presentations, albeit for smaller startups, but I've been the guy that's been throwing slide decks together for investor presentations or pitch decks. Data can tell many different stories. It is not always black and white as some people would believe, right? There are a lot of different ways to arrange data to tell one narrative versus another. And the people that are doing this are telling a narrative with quite a bit of intent. The way that your mind might immediately assume something or jump to something on face value, that is intended by the author of these slide decks. It's not to say that it's false information or, that would be fraud. But again, there are ways to change numbers and data or to base off certain things and add little caveats or context where you might immediately jump to something on the surface or, through an assumption that isn't quite exactly what's happening behind the scenes. So don't take everything at face value here. I'll help break down what I know as we go through these. But there are tips and tricks people use all the time when creating these decks to point your conclusions in a certain direction. So with that in mind, let's go ahead and start here at the transaction overview slide. So just looking at this, right? If you're looking at it with me, the first thing that's said is Endeavor to form a $21 billion global pure play live sports and entertainment company comprised of UFC and WWE. Right off the bat, they're saying it's going to form a 21 billion plus entity. Now that number comes from the combination valuation of the UFC being valued at 12.9 or close to $12 billion, and then WWE at a $9 billion valuation. Those numbers are not their current financials today. The amount of people I see that take those numbers and run with them and say, wow, like WWE's worth $9 billion, that's crazy. No, that is according to analysts who are thinking about future forward earnings as well as intangibles with IP. They're valuing it at a premium compared to what's actually being backed up by financials. Now, the majority of the time, we're not talking about crazy mismatch valuations, right? But sometimes that does happen. An example of that, right? WeWork, if you remember that story, and now they're doing the whole, I think it's Apple TV, right, with Jared Leto and Anne Hathaway. They've done the WeWork saga. At one point was valued at $47 billion in terms of evaluation. I think now it trades at like 69 cents, and it quickly dropped below $1 billion after the whole scandal, right? Where SoftBank was trying to sell it and there was no appetite for it, and it kind of just fell. I mean, that valuation, couple months passed and billions, tens of billions of dollars were removed, right? I mean, just so much money moved from the valuation. So don't look at 12 billion and 9 billion and think this is absolutely what just their pure hard financial support right now. WWE and UFC, keep in mind, are not WeWork, right? They are not trying to say they're a technology company when they're just renting out office space and all that stuff. No, they're not this web of misleading and all the other stuff that WeWork was. WWE and the UFC both are very profitable companies that, again, forward thinking, could they eventually be worth 12 billion? UFC and WWE 9? Yeah, it's not implausible at all, but they're not there today. It's taking a lot of future things into account. So don't just say, oh, that's how much they're worth today, because that's the first thing I see a lot of people doing right now, and that's not how that works. And it goes on to talk about, how it's going to form NewCo. It's, first of all, the name of the company is not NewCo. That's just the way that Reverse Morris Trust are listed as, hey, NewCo, until they come up with an official name. Stock tickers, TKO is what they're talking about, but they don't have a name for the company yet. It's just, hey, this is going to happen. And for all intents and purposes of this presentation, we're going to call this new company NewCo, but that's not actually what they're going to name the company, although that would be hilarious if they tried to name it that. It's going to be owned 51% by Endeavor, 49% by WWE shareholders. Again, not shocking based on last week's video. NewCo will be capitalized with $150 million cash at closing. Endeavor and WWE are permitted to retain certain excess cash as part of the closing, and public shareholders of this new company are expected to receive a post-closing dividend. So once the transaction is done, that means shareholders of the new company, which will be Endeavor shareholders and WWE shareholders, will get extra money in a dividend. How much will depend on how many shares, right? Vince McMahon, his shares are diluting from around 28% or 39%. I think it's 28 something, to down to 14.9%. He's going to get a dividend though on top of that, and it will probably be pretty high given the amount of shares he has, right? He's getting some cash. A lot of it though isn't, a sellout for McMahon. That's a whole nother reason why he's doing it, which we'll break down here later. Talk about the board of directors. Going to be 11 seats total, 6 Endeavor, 5 WWE. Each will have 3 independent directors. As we know, independent directors are sometimes less independent than you might think. It's not, someone that's clearly way out of nowhere. Usually they have some ties to someone, but they are supposed to be independent, right? They're not part of actual Endeavor or WWE. That's the main caveat there, is that's what they really mean by independent directors. NewCo financials will be consolidated. So that's a big thing to note, because whereas with Endeavor, we could kind of sift out what the UFC's financials were because they were lumped in with professional bull riding and a Euro League. And at one point, the couple of minor league baseball teams, you knew that the majority of the money and expenses was the UFC. You didn't know the exact numbers, but you could kind of flesh that out. Now, and you always knew WWE's, right? Because WWE was just its own standalone company. Now it's going to get a little bit more opaque. I'm sure they will break it down just as Endeavor does with their portfolio, saying like, hey, this is what the financials were here. But whether they break it down as just pure, like, here's UFC numbers and here's WWE numbers, far more likely they'll break it down in different segments, where, yes, you'll have discussions and highlights of here's how live events did, right? they'll probably do UFC and WWE live events together. They want to make it a little opaque. They don't want you to be able to look at their numbers and as straight off, right? Generally. So this will make it a little bit harder to kind of flesh some of that out. And transaction is anticipated to be closed by the end of 2023. So they expect to get this done by this year, which is not super surprising again with the reverse Morris trust. All right. Next up, we've got a slide talking about, value creation at UFC since acquisition. So this talks about, the 2016 enterprise value, and then today's enterprise value, where it's saying UFC was 4.1 billion when Endeavor bought it in 2016. Now it's worth 12.1. Got to take into account, again, lots of other caveats here. This is not just pure financials. It is not that, UFC is, when you take away all the assets and liabilities and all that, it's as it stands right now is worth $12 billion. That's not the case. It goes on to do a transaction value summary, which is interesting to note, right? Where you've got the enterprise value listed, less its current debt. So it has the UFC's debt here at 2.7 billion. So that gives you an idea of how much Endeavor's debt was, right, when they purchased this. And it also kind of gives you a preview, I think, of how much debt will be pushed down to NewCo with the 2.7. So expect Endeavor to kind of write off, 2.7 billion in debt. I don't know if it'll be exactly that number, but I think this gives you a little bit of a preview of that. So that Endeavor's overall debt will drop to 2.3, 2.4 billion instead of, the 5 that they kind of have right now, because it's saying UFC's debt is 2.7 billion. One would assume when you spin off the UFC and merge these companies, since Endeavor is allowed to push that debt down and then take back a special cash dividend, they will do that. It makes a lot of sense. Part of the reason they use this method. Equity value it has at 9.4 billion and 9 billion. And then it's got the FDSO too. I'm not going to go too much into the FDSO. What that is it's equivalent from both money and convertible. I'm not going to break it down too much. The contribution price, if you want to break it down, you could look it up, but it's basically just another part of the transaction in terms of determining, what the contribution price is and all this other stuff, right? For how much everybody's going to get per share. When you look at what that comes down to be from the UFC side anyway, I'm not worried about WWE. Contribution price is at $20.15 a share, and it's saying that WWE is worth $105.98 a share. So, let me just look real quick at WWE share price here. But yeah, right now WWE is trading at $97.23. So, they're saying in this transaction that WWE shares should be worth $105 or so. Well, 106, closer, 105.98. So again, it's not saying that UFC shares, if we spun off the UFC today, would be exactly $20.15, because it all comes down to, who's buying and selling. Anytime you do an IPO, Endeavor's IPO, right? They IPO'd at a much higher rate than where they are now. That's just kind of how this works. But this is saying that it's, in their mind, this is the premium that WWE shares and UFC shares should be worth. All right, so we'll move on to the next slide. But these are not hard and fast numbers based on fundamentals alone. That's the important part. All right, when we get to the slide, it says opportunity to own 2 global sports and entertainment leaders in a single company. They talk about four benefits to this: must-watch live and original content, large and young and diverse fan bases, best-in-class monetization, all just fluff, right? This is just mostly fluff. The last bullet point on that, upcoming media rights renewals of both companies. We'll get back to that later at a different part of the show. But a lot of just, hey, this is why it's so awesome and this is why it's a good opportunity for you, right? It's the pitch, part of the pitch. And then it breaks down revenue for each company. For the UFC, these percentages here, this is important to note because, again, you can manipulate the data to tell a certain story in some ways. For example, we don't know exactly what these 4 segments entail. You can take guesses at it, right? Media, one would assume, is, oh, that's just broadcast media rights deal. But does it also include pay-per-view kickbacks? Does it, you'd assume yes, but it's kind of a gray area here in some ways. In this particular case, I'm going to assume yes, because it's not. Well, no, live events is 11%. So pay-per-views could technically be lumped into there, right? Like you could go either way. This is, again, tricks of the trade a little bit, but we're going to take them at face value or assume they're mostly accurate here. And because they're percentages, we generally can, right? They're not saying specific numbers, all of that. And that is that for the UFC, 5% consumer products, so that's buying merch, all that fun stuff. Live events, gates are mostly what that is. It could technically be pay-per-view. I'm assuming pay-per-view is in media, but again, the way it's worded, trust me, I've seen certain contracts or certain breakdowns where you would assume there's no way pay-per-view would be in live events. Well, technically it is a live event and it is money based off of one particular live event. Yeah. Again, I don't think that's the case here. But so for this, we're going to assume it is, it's just gates, right? Just your, live event gates or special events, that type of stuff. 13% sponsorship, that's big. So again, they've been pushing hard for more sponsorship revenue. They've been growing that quite a bit in the past couple of years. It's been a major push. So the fact that that's the second largest source of revenue for the UFC tells a lot. And then, of course, 71% media. So that's the broadcast media rights. And we're assuming, doesn't necessarily 100% true, it's an assumption, but we're going to, again, roll with it, that this includes pay-per-view. So, I mean, that's most of their money, right? And you look at WWE, it's the same thing. It's not, not the exact same breakdown. You're basically swapping sponsorship and consumer products and adding a little bit more percentage to media, but it's all from broadcast media rights, which again, we'll talk about more here in a little bit. But it's important to note that people who want to say, oh, well, all the gates they're making and all this stuff, almost all their money comes from the ESPN deal and the pay-per-view buys. It's much more the static ESPN deal at this point. Pay-per-view buys are a nice bonus, but yeah, that as well as media rights deals in, outside of the ESPN as well in international countries we've talked about, doubling up their UK rights this past year, getting new deals in the Philippines and in various countries, right? When they doubled their media rights in China when Weili won the belt, moving into Russia and other, they are going hard internationally to double those media rights. Ari has talked about that's been the average as they've gone through these renewals. It's been double what they originally got. That's where most of that 1.1 billion comes from. So let's move on to the next slide here. Again, this is just multiple avenues for future growth. This is just business fluff, right? Maximize media rights values. Yep. Enhance sponsorship opportunities. Yep. Accelerate brand and talent placement, product licensing. Okay. And then develop new forms of content. So the one thing when you see through this business fluff, right, it's because, again, like, what does maximize media rights value mean? Well, we're going to double up your media rights in international places or enhance sponsorships. We're going to get new sponsorships. But something this type of slide does is, give a preview of where they want to go. The main areas they're looking for growth. So they're looking to increase media, increase sponsorship, but then brand and talent placement and product licensing. That's a big one because that's talking about putting, again, licensing for video games, licensing for, various things, and brand placement of putting UFC or WWE Superstars on each other's programs, all that stuff, right? That'll be interesting. And then new forms of content goes back to stuff like Ultimate Fighter or Tough Enough for WWE, right? That's creating new money generating content. That's always one of, the pushes generally for companies, especially in a merger. But not surprising here when media rights is such a huge part of it. Next slide. Again, leveraging Endeavor's flywheel to drive value creation. Global fan base expansion, where plus 75 million fans in the UFC. Fan base growth since January of 2021. Entered new markets in France. Investment in local stars, China and Mexico. Strong content promotion. That right there is key. Not the strong content promotion, but the new markets, right, with France, but then investment in local stars, China and Mexico specifically called out. So as I've mentioned on a couple other podcasts, and some people have called me out on it, like, whoa, like one thing I said, for example, was at the time, Weili getting a title shot, meritocracy-wise, didn't make any sense, right? I think Tisha Torres was the highest ranked fighter she had beat. She had beat maybe Daniel Taylor, an unranked, I forget exactly who before that, and then she got a title shot against the champ in China. It didn't make any merit, sense. If that happened with several other people, you'd be scratching your head like, what? Like, right? Like, to think of I don't even know. Just pick any random think of here's a good one, right? Think of Alex Pereira, who's fighting at UFC 287. He only fought a couple guys, but he did fight some ranked guys on the way up to Israel Adesanya. But then imagine that they hosted it in Brazil when Adesanya was the champ, right? And did a bunch of promotion, all this stuff. It's all about marketing and stars. It's part of the reason why they built the UFC PI in Shanghai. And again, Mexico, another prime example. Alexa Grasso getting a title shot against Valentina Shevchenko. That was a little bit, in terms of merits, like, okay, you could see this, right? But it still was a little bit of a, well, there might be other people that maybe deserves a shot ahead of Alexa, but she was in contention at least. So you're not, not head scratching too much. But the fact that she got the shot, Yair got the shot for the interim title, and then that they ran back Moreno Figgy 4. A lot of people thought, okay, Moreno Figgy 4 made sense because of just the way everything worked out. Yeah, sure, I get that too, but the fact that you had 3 Mexican stars get title shots all around the same time is a business tactic as well. And they also have built API in Mexico, right? That's like, if you want to know who's going to get the next push, look to where they're building the next UFC PI and then wait a bit and see if all of a sudden people from that country tend to get title shots. And this is not I need to clarify, this is not a nationality thing. I'm saying this is just a business tactic that Endeavor and the UFC uses. And I'm not saying any of those guys aren't worthy, right? They all won belts. Like, they all deserved shots, obviously. It's just part of their strategy to move into a new market, build a PI. In China's case, right, they had the combine. They were looking and cultivating for local stars. They even call it out, investment in local stars. That's part of their strategy. So keep that in mind as, again, they look to expand and move into new markets. Let's get back to the slide here. So domestic media rights, meaningful AAV growth. This is prior contract, broad and strong relationships. I mean, that's, again, just, another, hey, we've got good growth with what we're trying to do here. It's not anything, it's not it's mostly fluff. But it's there aren't as much things as we can extrapolate from the last part of the slide. International media rights, 100% AAV growth. And that's average annual value, right? They say at the bottom of the slide. Sorry, I should have called that out. But leader in international rights with 30 plus IMG media offices and global sales force, enhancing global rights. Again, can't take too much from it. But is saying, again, we are doubling our international media rights deals. Domestic meaningful is kind of like, what is actually meaningful? It's a little bit of interpretation there. Sponsorships, 3x plus in sponsorship revenues since 2017. Again, just talking about their sponsorship growth. So that's mainly what they're trying to hit, are those pieces. Expect them to continue based on the last slide, which was fluff, but told you where they want to go. They're going to do a lot more brand placement and licensing, more sponsorships, media rights, and of course, new forms of content. What that leads to, right, with Endeavor's creating shows, who knows? But it's, again, a not shocking service roadmap for your growth. Next slide. So key financials here. These numbers, again, all have a bunch of caveats to them. And these are ones where we can take them at face value-ish, but again, got to read the footnotes and got to know exactly what it's calculating through. And some of the footnotes, right? I guess there's going to be info here where it looks great at the surface. If you did enough digging, it's not that it's not significant, but it's maybe not as great as it seems. But let's just, for the sake of this particular discussion, assume that these numbers are on the up and up for the most part, with no, context that's hidden in those buried footnotes where it's like, oh, this actually means this. Even though that's probably the case in at least one of them. Revenue, $2.4 billion for 2022. Yeah, that's gross revenue top line. That doesn't take into account costs, right? It's not EBITDA. It's not net income. That's just the amount of money they generated before they had to pay anything. $2.4 billion. That's a lot. It really comes down to adjusted EBITDA, which we'll get to. Revenue growth, 10% from 2019 to 2023. So that's over a 3-year period. So not bad at all, obviously. But again, it's not they're just every year growing 10%. It's like, no, they're, it's over a set period of time. Adjusted EBITDA is $1 billion. So that's more take most of the costs out, all that stuff, where that's really closer to pure profit. It's not exactly pure profit. There are a couple things that can get taken away for adjusted EBITDA. But for this conversation, that's basically your profit. So $2.4 billion in revenue, one in around that in profit between both companies, right? This is not, UFC $1 billion. No, this is if you combine everything, which is another stat, or important caveat rather. Adjusted EBITDA margin, 42%. Again, for 2022, that's a lot of growth margin. That's pretty huge. That's something you want to tout, and I don't think is really manipulated, right? That's just like, okay, we're out of all of our costs, we're getting this much profit, which, I mean, that's why you have some fighters saying like, hey, are we getting paid more or whatever? Because that's part of what that circles back to, where if you combine these companies and you, again, smart in this presentation, because you don't know exactly how much percentage EBITDA is coming from each company. But in this case, it's looking at about 42% combined, which is still pretty good. Net leverage 2.5 times. So that's debt, right? That's how much debt is leveraged against the company. That's not that uncommon. That's actually a pretty good number for this combination, given what they, given what Endeavor's been through before, right? Like Endeavor had to get special. Remember when they got their latest loan, they had to get, a special review that said it was okay because they were levered up so much. 2.5 times leverage is not that bad at all. Contracted revenue, FCF conversion. I mean, yeah, that's fine. But I mean, again, things can change. It's important, but it's not, not as big as the other numbers. All right. And then lastly, last slide just talks about management. So to break down the management structure, right? You're looking at Ari Emanuel at the top, then split off into two, essentially reporting at an equal level for the most part is executive chairman Vince McMahon, who will run the WWE stuff, Mark Shapiro, who is the Newco Endeavor president and COO. And then you've got Jason Lubin, who's a CFO, who's kind of on that level as well. But that's Endeavor CFO. You have Andrew Schleimer, who's CFO, probably will end up reporting into Mark Shapiro. And then Dana White, Lawrence Epstein, Nick Khan, all that, is down beneath pretty much McMahon and Shapiro. So it's really Ari Emanuel, Vince, and Shapiro, and then kind of everybody else for the most part. I mean, the CFOs are a little, different, but that's mostly the org structure It's you technically Dana White is reporting into a level that would include Vince McMahon. I mean, he's not going to report to Vince McMahon. It's pretty much going to be a firewall, which again we'll talk about. But yeah, that's basically the leadership team for this. So those are all the new details we have. Let me know if you have any questions about any of the slides we covered. Again, big shout out to Jedi Goodman for putting those up and out there so quickly. But yeah, caveats abound. It's not just all, wow, look at all those numbers and they're fine. Like, nope, read the footnotes, talk about CARG and all that fun stuff. You can go in and do some of the calculations and you'll see, oh, that looks great. Maybe it doesn't look as great, but it's still a pretty solid pitch with not, in my opinion, too much manipulation for investors, right? I've seen far worse. Again, there's a million stories out there right now. So about companies, especially say in the crypto world or other places where those are the investor presentations you want to stay for. That's not the case. Endeavor is established. They have good, solid numbers backing both these companies here. But let me know if you have any questions or any further breakdown on that you want me to do. But yeah, great stuff and good to break down for this particular segment. All right. So next thing we're going to talk about here, and part of the why is just that. The simple question of why did Endeavor do this? Why did Endeavor spin off the UFC, merge it with WWE through a reverse Morris trust? And I've heard people say like, oh, it's obvious. I mean, they wanted to create the sports entertainment powerhouse. It makes so much sense. Sure. I mean, I guess they wanted to create this powerhouse and it makes sense. But again, that's not really an answer to the why. Right? That's okay. They wanted to do this, but it wasn't that Ari Emanuel woke up one day and was like, man, I really feel like combining the UFC and WWE. And so I'm going to make it happen. Right? That's not the answer to the question, why did Endeavor do this? So why? Why did they do it? When you look at Endeavor's history and the context around this, Endeavor has gotten to where they are now because they are a company that is heavy on M&A, which is mergers and acquisitions, and debt leverage, right? They've generally borrowed a bunch of money and levered up existing assets to purchase new assets they fit or they feel fit within their ecosystem. And by creating an ecosystem, you're able to get synergies and vertical and horizontal integration, which I'm not going to go into explaining what those things are. I mean, you can look them up, but essentially it's just pieces of the puzzle that seem to work together, right? They things like purchase on location, which allows VIP events for UFC experiences, right? Used to be VIP or UFC VIP experience. You'd call a number. I remember doing it a long time ago, calling a guy and it's like, hey, and some guy would kind of pitch you or whatever. Now it's on location, right? The same guys that did the Super Bowl way back in the day, and I think still do the Super Bowl in some cases. It's Endeavor's own brand can now, not only can you go see the UFC, which Endeavor owns, but you can do it in style through a VIP experience through a company that Endeavor owns. And hey, you can bet on UFC fights through IMG Arena, which Endeavor owns and feeds data into, right? They're the ones feeding into Sportsbook. They get cuts and all of that. It's the difference between, I think the easiest way I can place it is, or metaphor it in classic fashion, is it's the difference between a company hiring a independent contractor versus an employee, which is ironic given these companies, right? But, an employee, sure, you have to pay benefits and a salary or whatever, but you generally can get an employee at least at an hourly or salary rate far less than you can a contractor, right? If I come in and I'm doing contract work, consulting work for somebody, I'm charging X amount per hour. I have to get my own health insurance, do all that, sure, but I'm getting X amount per hour. But if they can find somebody where they can, sure, give them benefits and healthcare and all that, but which is part of a group plan anyway, and a lot of times, but then pay them far less per hour, plus, maybe make them do, same amount of work or more because say they're on salary, right? So they're not paid by the hour. That's a cut that goes to the company. This is a similar case in terms of, yeah, they're still having to pay costs for things and all of that, but they get more of the consumer's money. Remember, the consumer life cycle, the customer life cycle is king with a lot of this stuff. It's somebody goes to an event, they want to purchase alcohol, they want to bet on fights, they want to have a VIP experience. They're paying money for each of those transactions. And if Endeavor owns all of them, that means Endeavor gets all the money, or at least pieces of the money through their various assets. So Endeavor is a mergers and acquisitions company where they have gone and continue to buy things that they believe fit in the portfolio. This was another opportunity for them to do that in a unique way by A, not taking on any new debt, which, I mean, given how levered up, that was a smart call, but also B, allows them to take a lot of synergies between WWE and the UFC, put them together, and help streamline things. Right? Endeavor's giving up 49% of the UFC to this new company, where yes, Ari Emanuel is still CEO and all this other stuff, and Endeavor shareholders own 49%. So that means Ari's, shares, or 51% rather. So that means, Ari's shares, he's still got plenty of shares, and, between Ari and Patrick Whitesell and all, I'm sure that group still owns the majority of this new company. And Vince McMahon, right, his shares are diluted, but he still owns the majority of that new company on the or he's still the largest shareholder on the WWE side. He's not anymore the largest shareholder of the new company, which is a big difference. But it's a scenario where they're able to get a new company where, in the front office especially, there are going to be cuts, right? WWE and UFC, as different as they are, also have a ton of similarities. As much as Dana White doesn't like to say it, right? He modeled a lot of his initial moves off of Vince McMahon. Vince McMahon kind of laid out the playbook of like, hey, this is a way to do certain things that the UFC kind of copied. And now we're at a point where Endeavor can go through and, cut and take away some of these redundant jobs, which I feel for the front office, because again, I think that's going to happen, as well as go in and make changes to the UFC and WWE, which we'll talk about next. But it's another way for them to take a new company, add it to their portfolio, because they obviously believe, as you saw with media rights deal, which again, we'll get to, that's a huge part of it, but there's a lot of synergies between these two. It's a way to add a new company to the list. They couldn't do that for a long time because they were so levered up buying the UFC. This is their next step in doing that. That's what Endeavor does. It's part of the ecosystem, right? Just building that ecosystem as far as you can possibly build it. That's Endeavor's MO. So they did this because it was an opportunity to do that. And obviously, I'm sure they did a risk, benefit analysis, all that fun stuff, their due diligence, right? Of course they did. They probably spent a ton of money in lawyers and working with JP Morgan and all these other analysts to say like, hey, here's the valuation, here's how this could work. But it goes back to, the global young audience and the, media rights being a huge part of it, product placement and sponsorships being huge, where both of these companies are leveraging sponsors a ton right now. This allows them to cross promote and brand, right? Allows them to probably merge some positions in that, where some people can just take over all the accounts, cut some jobs. That's always something that, new mergers love to do is get rid of redundancy. There's enough synergies there after due diligence that it makes sense to add to the ecosystem. Exactly how? We will see. Endeavor has yet to buy a company where it didn't seem to fit in the ecosystem and make a lot of sense. I mean, that's not entirely true. They have occasionally, but if they do, then they spin it off again. This isn't going to be this particular scenario. They think that UFC and WWE are enough alike and can work well enough together, and they can utilize Endeavor's other assets around it. Even though Endeavor owns 51%, right? So it's not full ownership. Doesn't matter. It'll be just like when Endeavor bought the UFC in 2016. They'll still plug it in to various assets. I guarantee you, I don't guarantee, but I will 95% guarantee you that suddenly WWE events are going to have premium live, like backstage meet and greets with superstars through On Location or particular, buy a WrestleMania package where you get to do all this crazy stuff. And it's going to be through On Location, right? It's just another thing to add. If they get, I know they talked about doing betting on WWE matches. It seems like it got shot down, but they've been trying to talk to commissions to then have a situation like they do with the Oscars where a firm goes and, puts it under lock and key, attests to like winners are not getting out of the sealed envelope, all this stuff, blah, blah, blah. Doing that with WWE matches. Hopefully that doesn't happen if you're a WWE fan, but regardless, they could do something like that. And then all of a sudden, again, odds are being fed through IMG Arena and all that stuff. There's plenty there. Next question, and one I've gotten a lot since this has occurred, is will there be changes to the UFC? Some probably, but again, it will mostly be front office, right? If we're looking at a redundant job in WWE and UFC, they will look at who they feel is better at that job or who has more experience in certain areas. And they may try and relocate some people, right? Move some people around because Dana White loves to tout, like, I didn't lay anybody off during the pandemic and all this, of course. But, there may be changes in the front office if there's clearly a WWE guy who's way better at this. Okay, we're going to move him over and have him take the UFC job, right? You might see some backstage reporting, right, where you have Lorisenko and Megan O'Leary and all those guys. And then I know WWE has a couple of those. You might see some cuts there with talent, but there aren't going to be too many changes. There might be some presentation changes because I would imagine, even though they're different products, there will be certain things we might start to notice about just the production of both entities are aligned because you, again, want to consolidate production. So it's the same people putting that together, adding their own, flair based on product. But we might be able to tell like, oh, this is kind of a UFC thing and WWE thing that both of them do, right? Little things. But it's not going to be the UFC side that changes much. Honestly, it's going to be the WWE side. Endeavor is going to do what they did to the UFC, where they're going to, I think, trim a lot of the fat. I think it's going to be unfortunate for wrestlers where a bunch are going to get cut, especially bigger guys who aren't quite top stars anymore or who don't have a ton of storylines, right? Like they're going to get cut to save money. Similar to what WWE was doing before Vince McMahon left. That's going to happen. Vince McMahon is rumored to be back now in charge after WrestleMania. So changes in terms of that going on, right? I mean, the fact that McMahon is now back as an employee is a huge change on the WWE side. I believe sponsorships are going to be more prevalent. Wouldn't be surprised if in WWE we start to see sponsors on the ring, right? Like in the ring, similar to what UFC does. You're going to see way more, I guess the point is way more of certain tactics Endeavor has implemented in the UFC. You're going to see way more of that shift to WWE's product. There's not a ton of things that WWE has going on right now in terms of at least the actual product itself, where you can translate that over into the UFC. You could, I don't know, there could be production changes where maybe they're trying to do promos. There will be cross promotion. I'm sure Conor McGregor at some point will step in a WWE ring and maybe they'll do something where like a couple WWE guys want to, get in the cage, similar to what CM Punk did. Right. But instead of Punk trying to fight somebody that's actually doing MMA full time, maybe they get two WWE superstars to like do a reality show where they, fight in a cage against each other. Or, I don't know. There's a lot of, it's hard to say because they wouldn't want to necessarily hurt talent, but if it's younger people, you never know. Point is, there will be cross collaboration. How much we don't know. I mean, video games, I think, is one huge area of collaboration that you'll see changes. I would not be shocked if all of a sudden you're getting a ton of WWE guys that are current big champions they're trying to push in UFC games. Like you probably end up with like a Roman Reigns in UFC 5 or something. It's like, well, how's that happening? Or, a John Jones or Conor McGregor in the new WWE 2K game. That fantasy stuff like that, of course, but not a ton of changes on the UFC side. Honestly, it's just not. They're the model. They're the blueprint that's going to be implemented on WWE, not the other way around. Could be wrong. There could be big changes I'm missing, but right now that's how I see it. Right. This is again mostly about efficiency and that Endeavor's going to get their money worth from this because they're giving up 49% of that revenue that the UFC was generating for them. They have to make that back. And that's basically assuming that WWE is going to make that back through cost-cutting strategies and implementation. That's really what this comes down to. I don't love it for if you're a WWE fan because, again, who knows how many cuts, who knows exactly how it's going to work. But things are going to get rougher for the talent and front office people, at least initially. Exactly how they implement it, because WWE is enough of a business model, it could, kind of change some things. We'll see. But again, some of these cuts were happening on the WWE side before the sale was announced, where big names were getting cut. They got brought back after Vince McMahon left. Now he's back in charge, and now they're going to be going hard with cutting people and cutting costs. I don't see how some of these names are not recut or there's some other things going. But the UFC side, it's going to be business as usual and the same strategies they've kept with. I can't see any major changes. Little ones, yes. Major, it doesn't make sense. All right. So that all being said, everything we just covered, one big change that I think will be happening is the UFC's broadcast media rights negotiations. I do think this transaction will affect those. They alluded to it in their investor presentation, but having both of those media rights up for sale at the same time is a big deal. It's not quite at the same time, right? I believe WWE is 2026 and UFC is, they can start negotiating towards the end of this year. I believe 2025. So about a year and a half off. But now this gives this new company a lot more leverage when talking to potential buyers of their media rights. Keep in mind, had Comcast or any media company, right? Let's say Fox, even though they weren't really in the bidding, but any media company, Disney, had decided to buy, WWE outright. Because remember, this is more about WWE, even though the UFC is getting spun off. It's more about WWE. Had they decided to buy it outright, they could put WWE shows on their streaming services essentially for free. Their cost is baked into the product itself. Now, because WWE makes so much of their money off of media rights, right? You'd have to make sure it stays profitable to an extent. But I mean, think about that. Part of why, Disney probably regrets in a lot of ways not buying the UFC when the UFC was up for sale is instead of paying UFC $750 million for these media rights contracts, which is huge, they instead would have gotten a business that might be not quite profitable, right? Since it would have been 29% and would have been much more variable on pay-per-views, but potentially profitable because of, who knows how pay-per-view would have done and depending on other content. And they'd be paying, but even if it's a not profitable business, right? Let's say UFC got bought out by Disney and then there's no media rights deal. So at least, domestically, there still would have been profit actually, because they would have had the international rights deals, right? Where they're still working with sources of UK and China, all that stuff. As long as they kept the same roadmap, it would have been profitable. Not nearly as profitable as it is now, but they would have basically gotten a smaller profitable company under their umbrella instead of paying $750 million. That could hypothetically be a $800 to $900 million net swing, right? Of, oh, I could have had a $100 or $50 million profitable business. Instead, I'm paying $750 million. Same with WWE, right? 75% of their revenue, their 1.3 billion revenue, comes from media rights. So between gates, live shows, all that, maybe you buy WWE if you're Disney or something, like, and it, it's not super profitable, but it's way better than having to pay an exorbitant amount for media rights. And the other piece of this, right? So now that this is done and Endeavor has this, they've got the media rights deal secured, because these two entities are the two next biggest things outside of, the big four major sports, right? You've got football, American football, hockey, basketball, baseball. Those media rights are like the four crown jewels, right? If you want to go Marvel with it, they're the Infinity Stones. And then you could say the fifth is essentially a combination of either WWE or UFC. It's one of those two. I know it doesn't make sense in a Marvel context. It's just saying. But those are the big four. And then the next two best that you can get are UFC and WWE. Don't forget that when Fox opted not to renew the UFC's broadcast media deal, or at least not pay what they wanted to, what UFC wanted them to, they did that because they were acquiring WWE SmackDown, right? That was viewed as an alternative. That's no longer the case. This new company now wins either way. If this new company now goes to the deal with Fox, they could say, which do you want? Do you want SmackDown? Do you want UFC? And he says, no, we're not paying that much for UFC. We'll do SmackDown. This new company could say, well, actually, you have to pay at least this much. So you can pay a little bit less, but like you got to pay closer to what we were asking for. And it pushes it up quite a bit. That doesn't even take into consideration the fact that although the renewals are coming up at different times, this new company can now basically say, look, we can work out a deal here, right? Where, you buy UFC now, and depending on when the negotiation period is, right, you can't technically work out a deal at the same time. But I mean, it builds a relationship, right? Nudge, nudge, wink, wink. It's business. Where they can pitch it as like, hey, buy the UFC now, and when WWE comes up, maybe maybe you can double up on it. And we'll give you like a little bit of a discount, because maybe we don't think WWE can get double the media rights we're expecting. We can for the UFC. Maybe we do, a 1.8 total. So instead of doubling both, we 1.8 would give you a little bit of a discount. And now you get both. Or, maybe we double it. Maybe you have to even pay a little bit of a premium if you want both, right? Like, I know how badly you want both, depending on the appetite, because we know Netflix, we know Amazon. Netflix has talked about, Amazon has really been about it. Discovery has been, with the new leadership there, he's been making angles for the UFC. Maybe it's, hey, you pay both and you pay a little bit more of a premium, but we can guarantee you're going to be taken off in terms of your content. Right? Your subscriber growth is going to go through the roof. Trying to launch a new app, trying to launch that new HBO Discovery Plus, whatever it's going to end up being. I think it's just Discovery Plus. Hey, you pay a little bit more than double for media rights for UFC and WWE. Your subscriber growth is going to be insane. You're going to be able to go into your next shareholder meeting and say, hey, we got 50 million subscribers 3 months. Largest subscriber growth in history. You'll be able to tout that to your investors. Not a bad pitch. Not a bad pitch at all. it opens a ton of doors. In a best case scenario, they're going to get a combined deal that's worth more than what they were going to get on their own. In a worst case scenario, they're going to win the deals out the same way they would have as two separate entities and still make a ton of money that's all flowing through the same place. And that's how Endeavor is going to make their money, right? When 3/4 of each company essentially is made up of media rights, you want to own all the media rights. And Endeavor has experience selling media rights, obviously with the ESPN deal, right? And that's something they can leverage on WWE's side to probably get a better price. It's all going to come down to broadcast media rights, but that's where this does affect the UFC and their upcoming deal. Because now the stakes have changed. Now, if you're trying to negotiate or play hardball with the UFC and use a tactic of, oh, well, maybe I'm Disney and maybe WWE is a little bit more, they'll do PG for us. And, that's more of our brand anyway. So maybe we get that for ESPN and do all that. Can't do that now because you're talking to the, same person. It's the old, can I speak to the manager? And they turn around and put the same hat on, right? Like that's what this is now. This is not a different person you're negotiating with. It's all one company. It drastically changes those negotiations, changes the landscape of how those rights are going to come up. Because as I've said on this podcast, for both of these companies, the landscape was looking a little bit rough because of the overall macroeconomic environment. Not a lot of companies, right? Disney's doing layoffs. Apple's doing layoffs now. A bunch of people are, where it's not a great time to go and ask somebody for double what they were originally paying. This gives them less alternatives, or at least the same alternative, but now the money all comes through you. So maybe a company is like, nope, I can't pay this no matter what it is. I can pay this for WWE. Okay. If that's the best deal, great. And they'll take it. But more than likely, they'll be able to get much closer to their 100% AAV that they're targeting with WWE under the umbrella, because that's their biggest alternative competitor. We've seen it affect their negotiations before. It's now off the table. That's massive. So that's where I will say it does change things. I think that wraps up at least this portion of the podcast. I'll do quick hits here in a second, but let me know if you have any questions about anything I covered on the business strategy here, the why, how it's going to affect things. Again, I think there's going to be a pretty hard firewall with UFC and WWE, couple of crossovers here and there, some little things, but for the most part, it's still going to be the UFC being most of the same. WWE will probably be shifting. But this is just Endeavor's MO, right? Acquire a company, put it into the ecosystem, build those synergies and vertical integration, get as much cash as we can through the customer lifecycle. That's what they're doing here. So yeah, any questions or anything on this? Again, this is a great nerd out moment for me. And no, I did not know ahead of time that this was coming for sure. I mean, just to clear the air on that, I occasionally hear things from secondhand. Like I can almost never report like, here's a breaking news, because I have secondhand knowledge of something. And so there was a little ping or two on the radar, but this wasn't I knew this was coming and I was super sly about it. No, it's I saw it as a real possibility, and I talked about how last time. This is the why this week. So again, I'm not some crazy insider here. A couple of you have suggested that. I wish, but I'm not. But again, let me know your thoughts on everything. You have any questions on this? Because there's a lot to uncover here, a lot to unpack. All right, super quick hits here to cap off the show. Let me know if you like quick hits at the end too. I don't know if some of you do or not, but if you do, let me know. Grant Norris-Jones is named as the Senior Vice President of Global Partnerships to the UFC. Very interesting choice, right? Because this actually came out before the announcement of the merger. Paul Asensio or Asino, sorry, again, terrible at pronouncing names, is leaving, but not wasn't ousted. He's going to do F1 stuff, I believe. So it was kind of like, hey, he's leaving, we need to promote somebody. So yeah, this comes, an announcement that's just, I think, 4 or 5 days, or maybe not even. before the announcement of the merger. So you got to assume, because it was, an official press release, all this great, Norris-Jones is going to stay head of global partnerships. It's not a synergy where they're going to take a WWE guy and knock him out. You never know. But I would assume, based on that, you're doing a press release for it. I'm thinking he's probably going to stick around. Will WWE's equivalent stick around? That I don't know. But because they are different enough products, I would imagine you're going to keep most of the same teams. Maybe it's lesser teams, right? Account managers or partner managers. They might get trimmed, but the high guys, you figure you got to have one that's in charge of the UFC and one WWE. So I would imagine WWE counterpart is okay. But yeah, interesting that happened just a little bit before the merger announcement. And then the other quick hit we have is that BKFC has inked a deal with Rumble Distribution. So that is interesting indeed, right? This is the same company that is now hosting slap fights, and they have made a deal with Bareknuckle, which Bareknuckle again has been their last event, especially, right? Like, I mean, these events are now getting more into like bigger name MMA stars retiring, going over to do Bareknuckle. Their BKFC is making a name for itself in that sport. They're doing what they need to do there. But through the press release, Rumble, the video sharing platform, announced today addition of Bareknuckle Fighting Chip to its growing roster of live sports leagues. BKFC will kick off its Rumble distribution with a press conference for BKFC 41 at the Palm Casino Resort for Tuesday, April 4th. So that's happening, hosted by Dave Feldman, etc. With over 80 million users, Rumble is growing at an extremely fast pace. That's what President David Feldman said. They're making combat sports a big part of their portfolio. I'd guess slap fights is part of that. I don't know. But Rumble's obviously trying to make some inroads in that space. We couldn't be happier streaming BKFC events on Rumble. It's a start of a very big partnership. Rumble chairman and CEO Chris Pavlovsky said, "We are emerging, quote, we are emerging as a leading platform for combat and action sports leagues, which makes the addition of BKFC even more exciting." So again, that tells you that BKFC is excited because they got a streaming partner, so they're getting the media rights deals, not to the extent of WWE and UFC, but they're getting some paid for that. Rumble is getting excited because they're getting their name out there. They're starting to build a portfolio that will help any valuations or help them grow to build their own ecosystem. So in this case, Rumble's trying to be an ecosystem. BKFC is the product that's trying to get the media money, right? It's just what we were talking about, just on a much, much smaller scale. That's the only quick hits I have. Let me know if I missed anything, but that's all I got for you for this week's episode on quick hits. Then. All right, guys. Well, that wraps up another episode of the Fight Business Podcast. Really appreciate you listening, especially on this topic, because I love this stuff. If you're listening on YouTube, make sure you hit the like, subscribe, bell notification. If you're listening on Apple, Spotify, Stitcher, what have you, always appreciate and love you guys. For this particular episode, highly recommend you either check out the YouTube or you at least go to Twitter and follow along with the slides. Just go through the thread that's there. But great stuff in that regard. And until next time, y'all, get money.